Hey guys, Lance Martin, Coldwell Banker Town & Country in the Martin Group. I want to welcome you to our real estate market forecast, our May 2025 snapshot edition. And it's another month. I was just talking to Adam. I cannot believe it's May already. Same as always, same QR code. We've got tons of stuff there. We've been using it for quite a while. I'm going to start with our inland Southern California market update. I will tell you, if they look like they've been a little repetitive the last year or two or three, because the changes have been so minimal that it's been gradually kind of the frog in a pot kind of a thing. Anyway, I think we've actually got some stuff that I think is significant enough to change. I'm kind of changing my forecast, if you will. So pay attention. Here we are. Median price. So let's start with median price in our 4 counties. And basically, it's kind of flat. You can click into this 15-year chart if you want and play around with it, run your mouse across it. For those of you that like that stuff, just click the link below wherever you're watching this. Kind of the highlight is these numbers here, 2.8%, negative 1.8%, basically flat, 0.3 and 3.8. So what those are, median property values, May 2025 compared to May 2024. And for those of you that have been watching these snapshots now for a few years, I mean, going back to COVID, we had these ridiculous high double-digit year-over-year appreciation numbers and high single-digit month-over-month appreciation digits. Well, now on a year-over-year basis, we're basically flat in Orange County. I mean, even though it's got a median of 1.4, that's 1.8% lower than it was in, I said May, it's actually April are the numbers we're looking at. April 2024 was 1.8% higher than April 2025. Now, these are single-family properties in the county. If you want to play games with the numbers, change condos, do all property types, you start adding and removing things, and you might be able to get a chart that has all positive numbers, or you change it a little, like condos, for example. The numbers are negative if you just strictly look at condos. But this is the first year-over-year negative we've had in a while. We did have that pullback right after COVID for a couple months where we saw property values year-over-year that were a little bit lower, but it hasn't been that way for a couple years, so here we are. So with that in mind, our first year-over-year negative, not all property types, single-family residences in the 4 counties is what you're looking at here. So new listings, these are listings that came on the market in the month of April. And they are generally up. Actually, they weren't really up month over month, but if you want to compare year over year, positive 1.4, positive 1.9, positive 7.6, and San Bernardino brings up the top of the list at almost 12%. These are more new listings taken in the month of April compared to the month of April 2024. This is on balance good. We've been complaining about inventory levels. We want more inventory. We have more inventory, so very difficult to complain about that. And again, whether it's up 1.5% or up 12% almost, I'll take either one of them. Up is good, so the trend is good. So we like the new listings for April. All of the listings, every single listing that's on the market as of April 30th, again, we're up a little bit. We see the 15-year chart. We're way down compared to where we were, but we're up. But, so here we go. This is where I think things feel a little bit different, and I feel like my forecast might be changing a little bit. And I've been feeling this way for a little while, but it's not so much the numbers, it's the time of the year. So we'll get into that in a minute. So these are all listings, 25% higher, 42% higher, 27% higher, and 33% higher. These are all positive numbers, higher April inventory compared to April inventory 12 months ago. So we have more houses to choose from. Those are some pretty big numbers, just to isolate Orange County if for no other reason it's the biggest number on there. 42% more houses for sale in total in the month of April in Orange County than there were a year ago. That's a big number. So with that in mind, go back to the pricing numbers, which were basically flat in Orange County, down ever so much, 1%, which by the way is meaningless other than the fact that it's a negative number. But I would say the exact same thing if it was positive 1%. So let's keep going. So prices flat, up, down just a smidge. New listings up a little bit in April. Total listings up significantly, as much as 42% in Orange County year over year. Okay, so then what? Well, let's go to our pending sales. And this is the part that I've been really troubled with now for going on a couple of years. So here's our 15-year chart. As always, if you want to click into it, just hit the little link below and you can click on this chart and you can take a look at it in more detail for those of you that want to do that. So in the same way we had big numbers on active listings, all active listings, we have big numbers in pending sales on the downside. Active listings up 20, 30, 40%. Pending listings down 23% in LA County, 34% in Orange, 11% in San Bernardino, and 17% in 11% in Riverside, and 17.3% in San Bernardino. So it doesn't take a rocket scientist. I mean, I look at this stuff all the time, but if you don't, what do we have? Price is basically flat, okay? Inventory up 20 to 44%, okay? Pending sales down, those are buyers and sellers coming together. If you don't normally watch my video, what's a pending sale, Lance? That's a buyer and seller that came together, agreed on a price and terms, and are under contract. They're gonna close escrow in theory. Down anywhere from 17 to 34%. Those are big numbers in pending sale reductions year over year. The thing is, they've been big numbers for a while. You know, every month I'm up here, you know, kind of saying the same thing. And, you know, it's like, oh, and if people say, how's the real estate market? Well, the real estate market's horrible. Time out. If you own a real estate brokerage and you depend on transactions, which I do, if you're just looking at price, okay, well, if I own a property value, my prices are stable, I'm probably pretty happy. My home is worth more today than it was a year or two, or certainly more than 3 or 4 years ago, so I'm happy. If I'm a buyer, I don't like interest rates, my payments are too high, the prices are too high. But again, the market is generally, and there's more inventory coming, so that's nice. But again, if you depend on transactions, you know, escrow, mortgage, title, real estate brokerage, we're over here crying, and I have been a long time, and it's only because of these numbers. So that being said, I've changed a little bit of what my forecast might be for, well, let's deal with this here for first of all. This was put out by Inman News. It's a real estate news article. Again, nothing surprising. Existing home sales fall to the lowest pace since 2009 amid rising costs. I've got some other data on that we're going to take a look at in a minute. Again, and we've been talking about this. Yeah, okay. By the way, existing home sales, that's us. Generally, we don't do a whole lot of new home sales, so this would exclude all of the new home tracks. Having said that, I know some people that are in new home tracks, sales are down, okay? And most of that is just completely attributed to the fact that interest rates are up. So we've got pending sales down, days on market. To be honest with you, I'm gonna share this chart. I almost pulled it off because I'm questioning whether it's correct. This is all of the data that you're looking at is always comes from CRMLS. That's a California Regional Multiple Listing Service. It's the largest one in the country, I think. It's certainly the largest in California, and it covers all of these counties. This doesn't feel right, so I got to go talk to Art Carter and say, why does this not feel right? Tell me why this is correct. But the percentages are high, but forget about the percentages. 15 days on market, 11 days on market, 28 days on market, and 28 and 21, all sub 30 days on market. If I just look at that, it doesn't give me any heartburn whatsoever. That's not a long time. The reason I'm questioning that is because I look at our own inventory in our office, and our days on market are higher than that, okay? So I'm taking a harder look on the days on market, and frankly, to be honest with you, I'm questioning whether those numbers are correct. The problem with that, if those numbers are wrong, my other numbers are wrong, and the other numbers are not wrong. They're right, I've kind of verified them on my own. But the days on market number feels skewed to me. The month supply feels more correct. And the month supply is 3.7, 3.1, 4.4 in Riverside and 4.7 in San Bernardino. So what is the what does the month supply mean? Current number of buyers, current number of listings. If no listings came on the market for the rest of eternity, it would take in Riverside County 4.4 months for those buyers to absorb that inventory. Doesn't seem like a lot for those of you that kind of, let's Google that. What's the average days on market? A National Association has said it's about 6 months, month supply. About 6 months supply is considered normal. But that was like 15 years ago. So there's nothing normal about a 6 month supply. If we haven't had a 6 month supply of inventory in 15 years, well, then it's not normal anymore. Those numbers have been sub 2 months, and for a better part of the last 5 years, they've been less than a month of supply of inventory, pretty much in every one of those counties, which is why we have more inventory, and that's going to change a little bit. So As I mentioned a couple times, I'm doing more business down in the low desert. For those of you that haven't been to Indio in a while, Indio is not the same Indio that it was, 20 years ago or 30 years ago when I was driving through there as a kid. So again, you can click into these links. I do find it interesting, as I always say every month, it doesn't matter what spotlight city I do. You can line up Indio against Buena Park, and quite honestly, the numbers will be different, but the charts look very, very similar. So median price in Indio, believe it or not, is $572,000 in Indio. Okay, there's a lot of beautiful homes in Indio. We just signed up like 3 or 4 rentals just in the last week out in Indio. They're gorgeous. I'd move into them tomorrow. Anyway, 572, up 4.3% from a year ago. So there's your price in Indio. Active listings, 503 listings in Indio, which, by the way, that's a pretty decent size number of listings. That's up 20% from a year ago. Looked like it tailed off just a little bit in the month of April, but still 20% more than a year ago. And the pending sales down only 3.2%. So if you looked at, I think if you went, Indio is Riverside County. If you went back and looked at the Riverside County pendings, I'm not going to go back, but I think they were down 22% or 32%. I can't remember, but high double digits. Well, Indio is only down 3.2%. So heck, if I'm selling houses in Indio, or if I'm trying to make a living in Indio, or if I have a house to sell in Indio, the Indio market actually is outperforming the county from that perspective, and it's only off by about 3% as far as pending sales are concerned. So all those other snapshot cities that I've done are at the end of this deck if you want to take a look at them. Interest rates, the X factor. It has been the X factor now since we've come from our 3% interest rate up to our 8% interest rate, back down to about a 7% interest rate. I have no idea what's going on. Trump wants to do tariffs. We back off tariffs. We implement tariffs. We go from this percent to that percent. We got a lot of chaos going on. The stock market loses $1 trillion worth of value in a week or two and then puts it all back as of yesterday. So we're kind of, whatever happened with that last 45 days with the tariffs and the drama, at least as it relates to the stock market. Okay, little panic attack over, everything's back to where it was. But the bond market has a different idea. When the stock market was going down, the bond market was said, okay, well, we're going to do our thing. When their thing has basically been a 10-year treasury at about 4.4%. That is translating to basically a 7% 30-year fixed rate. Can you do better than that? Yes. Depending upon your credit and a whole bunch of other things. Would you get quoted a number higher than that? Yes. But anyway, that 10-year bond we've been talking about for so long, I'm obsessed with it. It seems to like that 4.4 range, which given the current spread and all the rest of that sort of stuff, we seem to be stuck at an interest rate somewhere between 7.75 and 7-ish. It's not horrible. Historically, it's not horrible, but coming off 3%, it's psychologically a barrier for a lot of people, and given the prices where they are, a 7% mortgage rate and prices up 30, 40, 50, 60, 70% from where they were 3-4 years ago, that's a problem. We definitely have an affordability issue. Just ask me, ask my agents, ask the lenders I do business with. But, we're doing deals, but there's just a lot of people that feel priced out of the market because of rates and such. So I still am throwing this up here. Wells Fargo still has not modified their forecast. They're still shooting for a 6.5% mortgage rate. I don't have it on the chart, but CAR modified their forecast. They're still saying we're going to have an interest rate sub 6.5, which would be awesome. We're not that far from there, but it'd make a big difference. There's a big difference psychologically and payment-wise between a 7% mortgage and a 6.5% mortgage, or a 6% mortgage. So they seem to be sticking with that forecast. I don't know. Here's just our chart. I haven't really modified this chart, but we're still in this frozen range. As long as we're in a marketplace where we have interest rates basically at 7, we are frozen, and that's the pending sales. That's that frozen chart. There's just not enough buyers and sellers coming together. So what's my forecast? This is the chart that I put up for the last 3 months. Actually, I think I started this in January. And I said prices up slightly, inventory more, sales volume, blah, blah, blah. And then I had no change. Well, actually, I do have a change. So based upon what I'm seeing now, I'm not so sure prices are going to be up. I think prices might be flat. Prices might actually pull back a little bit between now and December. I've been kind of thinking that potentially could happen. but it just didn't feel like we were there. Now I kind of feel like we might have some softening in prices. So whatever that means to you, if you're a seller and say, oh my God, Lance said prices are peaked and they're going to pull down, well, call me, let's list your house. Having said that, if they pull down, I'm talking like the Orange County number, 1%, 2%. I'm not talking anything drastic here. But it doesn't feel to me like prices are going to be increasing at interest rates of 7. If we end up with interest rates lower, I'll come back and I'll change that forecast. It's that one X factor I have no control over, and the people that I trust that tell me where it's going to go, for the most part, have been wrong now for going on 2 or 3 years. Inventory obviously is up, sales volume up. If you looked at the last month's chart, I said, yes, sales volume is going to be up, but it's off record lows. I don't think we're going to have increase in sales volume. I think sales volume is going to be flat to down, which nationally that's 4 million units or whatever the number is. California, that means like 380,000 units sold in the entire state. It might sound like a lot of homes, but it's not. We used to sell over 500,000 homes in California in a given year. So I don't believe we're going to see prices do anything other than flat, maybe pull back a little bit. I'd love to see sales volume increase, more transactions. I don't feel that's happening anymore. So why don't I feel that? What made me change it other than these charts? This was put out by Inman. I didn't source it properly, but I pulled this off of Inman News. To be honest with you, I don't know what their source was. But whatever survey they did, assuming it was scientific and meant something, 1 in 4 potential buyers are waiting for rates to fall below 3%. If you happen to be one of those 4%, or one of those 1 in 4, or those 25%, you're going to be waiting a very long time, okay? Will they ever hit 3? Who knows? I don't know. But it doesn't feel, it feels like we're a very long way and a gigantic number of events that would have to happen before we get anywhere close to that. Right now, if I could just pray to my crystal ball, I would love to see a rate closer to 6. And if you were a buyer and you could afford a house at 6, I'd say buy the house. If you say, I'm going to wait until 3%, I say, let me show you this beautiful rental I have over here, and I'd be happy to sign you up on a long-term lease if you're looking for a 3% deal. So there's that. That's almost kind of laughable. But the main reason I don't think we're going to see, and this chart can be a little funky, so bear with me on this. The main reason I don't think we're going to see any price increases, significantly flat to, maybe back a little bit, or more importantly, to be honest with you, transaction volume, for me, more sales. This is the 15, 16, whatever it is, 17-year chart that's on the other slide that we looked at, 3-4 minutes ago. All of these little green, little pulsating, I don't know if they're translating on the video or not, but we've got these little green balls, and they're all at the top. And by the way, these are all the counties. LA's in red, orange is in blue, and gray is San Bernardino, and I guess green is Riverside. All of these peaks on these EKG are the month where sales peaked, the maximum number of sales, buyers and sellers coming together in that given year, okay? And I might be off by 1 or 2. I went and looked at these, but I didn't want to take the time to put April, May, April, May, April, May, June, April, May, but they're all basically April, May. There might be one that was June. I think there's one actually that peaked in March. But if you go back for basically 15 years, the maximum number of sales in any given calendar month is basically the month that just passed, the month of April. Maybe May, and today's May 15th, by the way, so we're halfway through. So that being said, when you see these sales numbers basically trough, all of these troughs are basically December. Some of them are January, but in effect, April, May down here, December, January over here. So we've kind of peaked. Kind of hard to say. I mean, it's the middle of May, and as far as sales, buyers and sellers coming together, transaction volume, I think we've seen the best that we have for this coming year. We'll see when we do the June snapshot, we'll see what May holds, but we've only got 2 weeks left in May. Sales basically are what I've talked about. So because of this is why I don't think we're going to see an increase in sales volume. And by the way, the forecasters that I actually look at, they're saying we are going to see more sales. Okay, all right, well, I hope they're right. I hope I'm wrong, but it just doesn't feel that way based on this, unless we just have a fantastic summer and then basically fall sales season. which is generally not the case. We generally sell fewer houses. So we'll see. We'll see how that works. And by the way, interest rates change all of that. If interest rates come down, they change everything. So that is my May 2025 Real Estate Market Snapshot. I am Lance Martin, Coldwell Banker Town & Country and Cobalt Property Management. So if you're in the one part of our business that is just smoking hot right now is our property management side. So if you're a landlord, a tenant, you have a homeowners association you need help with, give us a call. I was just telling Adam we're going to shoot a whole bunch of property management videos here over the next couple weeks. So keep us in mind for that. Anyway, have a great May and we'll see you next month.